In business news, a lackluster debut on the Indian market for South Korea's Hyundai Motor after it raised $3.3 billion in the country's biggest ever initial public offering. Our shares closing at around 1,820 rupees. That is 7% below the issue price of 1,960 rupees, which was at the top of the marketed range. The IPO received a lukewarm response from retail investors. It was subscribed 2.37 times on the final day, with institutional buyers coming to the rescue as the three-day sales window drew to a close. The IPO had valued Hyundai's India unit, that's the country's second largest car maker by sales, at about $19 billion, with the South Korean parent putting up a 17.5% stake for purchase. Today's listing in Mumbai is Hyundai Motor's first such debut outside its home market of South Korea. Indian peers also sharing the gloom, shares of Mahindra, Tata Motors and Maruti Suzuki all taking a beating. And for more, Rebecca Bunton joins us live from Mumbai. Rebecca, this lackluster debut down 7%, why?
Yes, this is certainly a disappointing performance for the company on its first day of trading, but to some extent it had been expected that Hyundai may see a decline in its share price, because if we look at what happened with the IPO last week when it opened for subscription, we saw a lot of demand coming from big institutional investors who snapped up shares and oversubscribed the issue. But when it came to retail investors, they were very, very cautious. And actually, in fact, they only bought about half the shares that had been allocated for them. So analysts are saying that this is for a few reasons why retail investors are being a bit wary about the company's trading. And that's partly because of the sheer size of the issue. This is India's biggest ever IPO, but also the fact that they had been concerned that the share price was a little bit expensive. And this comes against the backdrop of quite a difficult car market in India at the moment. There has been a slowdown in terms of car sales. And if we look at the latest data for September, there was actually a 9% drop in retail vehicle sales in the country. So this does come amid a sluggish car market as well, which is another factor. And we also saw declines in other car makers trading in India as well. So it's not only Hyundai that has been affected by this, but certainly that was a very, very sharp decline that we've seen on its first day of trading. And now analysts and investors are going to be watching very closely to see what the share price does next in the coming days.
Rebecca, even so, this is Hyundai's first market debut outside of its home market of South Korea. How is that significant?
Well, analysts say that the fundamentals in India are extremely good for Hyundai Motor India. They say that it's really a good market and that the company's been doing very well in India. India is in fact the world's third largest car market, and it has some $100 billion of sales annually in the automotive market. And although there's been a temporary dip, analysts are saying that this dip in the car market is a temporary thing, and that over the coming years, car sales are only going to grow in the country. And Hyundai is really focusing on research and development in India, and it also wants to launch new products, including EVs. And that's really the main reason why it's launched this IPO, why it's gone for this listing, the fact that it really wants to expand very aggressively in India. It plans to open a new plant next year. It wants to launch new products in India. And it's not only the Indian market that it's focusing on. It also is very keen to expand its exports. It's already a major export of cars out of India to markets including Latin America, the Middle East and Africa, and it really wants to grow this business as well with this listing and the funds that it's raised from that. So really it sees a lot of potential in India.
Thanks, Rebecca Bunton, live there from Mumbai.